Okay, hello and welcome everybody to the weekly market forecast for Wednesday, July 10th. This webinar is brought to you by OctaFX, the award-winning Forex broker offering some of the lowest spreads in the industry. Without further ado, let's jump right in. First of all, a couple of quick disclaimers. Risk disclaimer: trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. Secondly, a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute specific investment advice. In other words, we're not giving out specific trade recommendations. Next up, this is a technical presentation today, but we do want to keep aware of what the top economic events are coming up. It's a quiet day in the market today, being a Monday, but there are some events later on this week to be aware of. Wednesday at 3 p.m. GMT, we got the Fed Chair Janet Yellen testifying, and we also have the Bank of Canada rate statement. So look for some action in the Canadian dollar on Wednesday, possibly the US dollar too. Thursday, we got the PPI, Producer Price Index, month over month, and the weekly jobless claims figure, both US figures there that could have an impact on the US dollar. And Friday, a couple more US figures, retail sales month over month, and the consumer price index, which could be potential market movers. Other than that, a pretty quiet week overall. Let's jump in and talk about what we're going to do in today's webinar, what we're going to cover. As usual, we're going to cover key support and resistance levels, recent and emerging chart patterns, technical indicators, and we're going to do our weekly trading strategy and look back at last week's strategy also. Tools we're going to use today, key takeaways. These are things I hope that you'll be able to take away and use yourself. We're going to look at trend lines and patterns using trend lines. We're going to use multiple time frame analysis, moving averages and moving average crossovers, momentum oscillators, RSI, stochastics, MACD, that kind of thing. And we're going to touch on Fibonacci. Today we're going to go a little bit further than looking at retracements. We're also going to look at Fibonacci extensions. Okay, let's move on and discuss our strategy of the day. Strategy of the day is a trend line trading strategy. We talk a lot about trend lines in my webinars, so I think it's a good idea to start talking about a strategy in conjunction with all these trend lines. And today we have a trend line trading strategy using stochastics, the momentum oscillator. So let's look at what time frames you use. You can use the hourly and upwards. I would recommend looking at hourly, 4-hour, or the daily. The weekly and the monthly, you might not get many signals, but you could look at those too. Beneath the hourly, I think you're going to get a lot of noise. You can experiment with that, but I think better to do the hourly and upwards. Currency pairs, all pairs. This is classic technical analysis, applies to pretty much any security out there, not just Forex, but yeah, this is a strategy that can be effective on all pairs. So let's look at the buying rules. When price retraces to an uptrend, look if stochastics are in oversold territory, in other words below 20. If so, place a buy stop order. If you're not sure what a buy stop order is, you can talk to your broker about that. I'm sure he'll explain that. Buy stop just allows you to put an order in above the market. So if these conditions are met, price retreats to a trend line, stochastics are in oversold territory, place a buy stop order above the candle which found support at the trend line. So that's the prior candle probably. Next, place your stop loss at least 5 pips below the trend line and the profit target at the prior swing high. In our previous strategies, we talked about having a profit target of twice what your risk was. This has got a different profit target set up where you're looking at the prior swing high, and we'll make that clear when we look at an example of this on the chart in just a minute. So, and then conversely, selling rules are just basically the inverse, but when price rises to a downtrend line, look if stochastics are in overbought territory above 80. If so, place a sell stop below the candle which found resistance at the trend line, and the exact opposite, place your stop loss 5 pips above the trend line and the profit target at the prior swing low. Keep in mind something about the strength of trend lines. If you're just starting out, you may not be aware of this. The more times that the trend line has been tested, the more valid a technical indicator it becomes. So it's been tested multiple times, it becomes more significant, and if it's broken through, support may become resistance, and vice versa. The final piece of advice for this strategy is just don't trade it around major news releases. And that's it. And with that, let's jump into the charts and take a look at how this strategy works. So I pulled up the Euro daily chart, and so here we have an uptrend line, a really nice, nicely well-defined uptrend line. It's a strong one because we can see it's been tested so many times. 1, 2, 3, 4, 5, 6, 7, 8, 9. Multiple times that it's been tested. So what we saw price retracing to this upward sloping trend line, and our second parameter was to look to see if stochastics was in oversold territory. So we had stochastics both in oversold territory. We had price retracing to the trend line here. So we had a buy signal here with this system on the daily chart. So we would have put our sell stop in below the trend line here. Since it's the daily chart, I think probably want to have it even more than 5 pips. I'd probably recommend 10 pips, but if you're looking at a shorter term time frame, you might be using something like 5 pips for the hourly or the 4-hour chart. And then our entry was above the high of the candle that came down and tested the trend line, so it would have been about here. And you wanted to take your trade off at the prior swing high. So the prior swing high was all the way up here. So this was a move from roughly 106 to 109. So you can see on the daily chart, you can catch a nice large move of several hundred pips with an entry signal like this. It takes a lot of patience. You might notice this gap here, which took place in April. That gap took place when Emmanuel Macron won the first round of the French election, in case you're wondering what that is. Anyway, we can see that price came up. We can see the 200 period simple moving average here, and that provided a level of support moving higher. Let's take a look at the gold chart next. Here's another instance of this strategy where you'll be taking a buy signal off a retracement into a good upward sloping trend line. And so here again, we had price retracing to the trend line. We had stochastics in oversold territory, curving upwards, which is what you want to see, and then a really big move off that. So the prior swing high in this instance would have been all the way up here, and you would have put your stop loss something beneath that upward sloping trend line, not too close, because we are looking at the daily time frame. Keep in mind, as I always say, the stronger signals come from the longer term time frame. So of course, when you see a trend line on a daily chart like this, it has a lot more validity than something you're going to see on a 5-minute chart or a 15-minute chart or even a half-hour chart. Next up, I pulled up a chart of a trade that may be setting up in a similar fashion. We have the euro against the Canadian dollar, euro CAD cross. It's called a cross because it doesn't include the US dollar, and we have a really strong upward sloping trend line. We can see that price is retracing here and is coming down towards the upward sloping trend line, and we have additional confluence here with the 200 period simple moving average being right around here at in the same area, as this trend line. So this might be a good potential buy signal down here. What we don't have is stochastics below 20, but we might see that later on. It might take a little while for price to come down here if indeed that's what it does. So there's our strategy of the day, our trend line plus stochastics strategy. Let's move on and take a look at what's going on in the pound. In the pound, I pulled up the Fibonacci because I think this is a good example to illustrate Fibonacci levels. Here we have the swing high to the swing low, and price retraced here, and we can see that it found support around this Fibonacci ratio, the 38.2% level. So here we have, you could view this as a first move from A to B here, and from B to C here. And what you might expect is a fourth movement, a second movement rather, downwards. So today I'm going to introduce a new tool that called Fibonacci extensions, or Fibonacci expansions they're called sometimes, that can allow you to forecast where price may go in the case of a further down move. So just get rid of that. So here's how the Fibonacci expansion tool works. You find your first point here, you choose your second point here, and then you pull up to here where price is now, and here you have your potential targets based on Fibonacci ratios in the case that you're looking for price to continue to the downside off the resistance of Fibonacci retracement levels. So here are the extensions before we were looking at the retracement levels. So we can see 61.8%, 100 is not a Fibonacci level, but here we have the 161.8, which could potentially be a big level, and that corresponds with the number phi, which is 1.618, the golden ratio. Next up, let's look at the Canadian dollar. As you mentioned earlier, we might see some action in the Canadian dollar because we have the Bank of Canada meeting later on in the week. This is a nice example of a breakout to the downside in a upward sloping channel on the weekly chart. So since it's the weekly, these technical levels are very significant. As I said, the longer the time frame, the more significant the technical levels are. And we saw a nice breakout to the downside. And this is what you want to see if you were trading the breakout, because there's a nice big fluid movement, a Marubozu candlestick where it's almost got no wick at the top or the bottom, very bearish candlestick, and a nice fluid down movement. To the downside, we have a 200 period simple moving average providing potential support. Similar scenario in silver on the daily chart. We had a slightly upward sloping channel, and here is we had a breakout to the downside, and here is a good example of how support can become resistance. So we saw support was violated here, and then the same support level became resistance once, twice, 3 times, and then price continued to trade lower. We're going to pull up silver again on the daily chart. I mentioned this last week too. This is one of my favorite patterns to look for, is if you can find a market that's trending nicely in a time frame on which it's trending nicely, I recommend pulling up the 5 and 10 period exponential moving averages, which can, if the market is trending, can give you nice entry signals to hop onto the trend. So in this instance, we can see the moving average is crossing over the 5 period, crossing over the 10 period here, and then almost a stair-step move downwards also. We had support from the momentum oscillator, which went just into overbought and crossed below, which is another bearish signal, confirming this bearish signal up here. We can see that there was a bullish crossover here. It didn't cross over here, and there was a crossover here and the crossover here. So recommended to keep your eyes peeled for markets that are trending nicely on specific time frames, and do pull up the 5 and 10 period EMAs and take a look at how well they predict trend changes. EMAs are exponential moving averages. They're just moving averages that put greater weight on more recent time periods as opposed to simple moving averages. Next up, I pulled up the GEPI, the pound against the yen. We've got a pretty nice ascending triangle pattern forming here. This horizontal trend line been tested once, twice, 3 times, and a fairly good upward sloping trend line to the downside with additional support from the 200 period simple moving average. Stochastics curving over in overbought turning, looks like they're coming back below the 80 level, which would be more of a bearish signal. And let's zoom out and see what kind of a trend we're in. We're actually in more of a downtrend. So if I was trading this ascending triangle pattern, I would possibly be more inclined to trade a breakout beneath this upward sloping trend line here, if it can get through this kind of double support that it's got of the 200 period simple moving average and the upward sloping trend line. Looking at the fact that stochastics are about to cross below 80 with a bearish signal, and we are in a bigger picture downtrend. Next up, let's pull up another cross, the Canadian dollar against the Japanese yen. We looked at this pattern last week, an inverse head and shoulders. It's actually a bullish reversal pattern. We can see shoulder number 1 here. Here's the head, here's the second shoulder, and this is the neckline, which is a really well defined horizontal resistance level. And we talked about this last week, and we can see that price went right up to this neckline and found resistance there. What we'd expect to see then, if price can break through this neckline, is a nice fluid movement to the upside. So it's still waiting, and it hasn't yet got the strength to break through there yet, but if it'll be interesting to look back and see what happens next, whether price is able to break through, and what happens when price breaks through if we do get a nice fluid move to the upside, possibly closing this gap here. Finally, we're going to take a quick look back at the trading strategy we looked at last week, which was the daily high-low breakout strategy. Very simple strategy where you're basically looking for, at the prior day, this was the prior day in the case of last week, price broke out to the upside. You put your buy stop order and a sell stop order in, you put a buy stop in above the market, a sell stop order in below the market to get you into the trade in whatever direction it's going to go in terms of the daily high-low breakout strategy. Price ended up breaking out to the upside, so we would have got long here, and price continued higher here. So with that, guys, I'm going to wrap it up. I want to thank you all very much for joining me. This video will be recorded. You can view it on YouTube if you want to go back and look at any of the ideas, and do feel free to send any questions to webinar@OctaFX. Thanks again for joining us.